Welcome to the Money Huddle, a podcast that discusses financial topics for families, retirees, and small business owners. Hosted by Michael Baker and Ross Marinell. All opinions expressed by Michael and Ross or any podcast guests are solely their own opinions and may not reflect the opinions of Advisory Alpha. The podcast recording is for informational purposes only and should not be relied upon for investment decisions. Clients of Advisory Alpha may maintain positions in securities discussed on the program.
All right, welcome back to the Money Huddle. My name is Michael Baker, and I'm here with Ross Marinell. Ross, happy Friday, buddy.
Happy Friday. Today is Power to the Player Day. That is GameStop's logo, and we have to talk about the most entertaining and biggest news story this week in finance. So listen, finance has a headline story, and we got to talk about
it. No doubt. You wouldn't be referring to the little engine that could, also called GameStop, on everybody's computer screens right now, right?
So,
that is that what you're referring to?
So I know most of our listeners have probably heard something, read some articles, been following it. Heck, maybe even bought a few shares. I don't know, but we got to dig in a little bit, because this doesn't happen very often, that a group of individual traders takes on a hedge fund and wins. Essentially, that's in my opinion, that's sort of what happened. So let's break down a little bit of just.
Well, hold on. I would say the game is still afoot. The game is still afoot, because now that other people are, now that everyone is paying attention, there's more happening, and I don't think this thing is over yet.
Well, sure. I mean, I was looking at, so we're recording this Friday morning. I'm looking at GameStop and Y charts up 65% this morning. That's $126 a share. The share price is around $319 as I'm just looking at it. And I'm sure it is
$319.
Massively volatile. And it wasn't long ago. So the stock was trading at around $17 to $18 toward the beginning of this year, early January.
All right, so let's take a moment. Let's take a moment and give everybody that might be tuning in just a brief, Reader's Digest version of what's going on in a nutshell. And I posted about this, and of course, if you are so inclined where you want to get the actual nitty gritty details of every moving part of the story, there are already articles out there being posted that are breaking this thing down. And I suspect that we will see some long form essays written about this in the weeks and months ahead. But essentially, what has happened is there's an online trading forum on Reddit, and a group of these folks, they found that GameStop is a stock that was being short sold by some hedge funds. And selling short is basically the funds, they borrow the shares, sell them, which puts downward pressure on the stock price. And then one of these guys went onto TV and basically just bashed the stock because they want to drive the price down, because that's their bet. They think the price is going to go down. And then they can repurchase the shares at the lower price, deliver them, and then make a profit. And that was the game. And so some of these traders decided if they banded together, they could buy the stock, make the stock price go up. Well, when the stock price moves against you, if you're selling short, there's a point in time where you have to start buying the shares of the stock to cover your short position. Otherwise, you're going to basically expose yourself to almost unlimited losses. And so what happened is they broke that short trade with one of these funds, and it became a buying frenzy. So and then of course, what's human nature when we see a stock price or a cryptocurrency price going to the moon? These online apps, everyone has a smartphone now where you can essentially trade in your hand. So people just start buying this thing, and it's just crushing. And it truly became a David versus Goliath, with the day traders and the Reddit traders going up against these hedge funds, and it has snowballed into something that is quite spectacular, if I may say.
So I think that's a good summary. The way I kind of put it was, so the forum on Reddit is called Wall Street Bets. There were several 100,000 people that were participating in that forum before it exploded. Now I can only imagine it's probably in the millions. But there's a particular individual, and there was an interview on the Wall Street Journal today with the actual initial person who posted this trade. But basically, you identify a target, right? So he identified a stock that had a very high short interest in it and discussed the trade and said, here's what I'm doing. Then basically a lot of people come along with them, right? And so they unify in numbers and they all are marching in the same direction, right? Which is they want to go long on the stock. So whether they're buying the stock or they're buying call options or whatever they're technically doing, the goal is they're pushing the stock higher. Basically, they squeeze the price to higher. And like you said, these hedge funds that were short the stock now have to go and cover their position. So they actually have to buy the stock. So now they're creating momentum in the price increase direction, even though that's not really what their intended purpose was. They wanted the stock to go down, but they had to cover their short position. And so the hedge funds got caught. They got caught pretty bad. And so Melvin Capital has made the news as one of the hedge funds that had a high short position. I was reading a CNBC article that said they didn't disclose how much money they lost, but it was a huge loss according to CNBC. So one hedge fund had lost a pretty massive amount of money. They got bailed out by a couple of other hedge funds, and I'm sure we'll see what their future holds. But essentially, what was identified worked, because they took this stock from the mid-teens, like mid to high teens, like $17 to $18 a share, to at one point the 52-week high was $483. So, and the low was $2.57. So, what's I think took the media by storm was that it worked, and some people involved in this were going to make a lot of money. And it's like you said, it's the small traders.
So, I saw a thing on Twitter where someone had posted that the original guy, and he's got a handle. I can't think of his name off the top of my head.
I know what it is.
They had posted
it's not very appropriate for our podcast, but
yeah, there we go. So that he was still in, and this guy I think had the value of his position. I think I want to say he started with like $50,000, and it's become like 20 plus million. And he was still posting on this forum saying he's still all in and doing this. And I tweeted back at him. Now these guys have got like hundreds of thousands of followers now, where 3 months ago they would have been probably catching this like on the first wave. But I was like, take the win. Do not mess with this. Isn't that like what we preach so many times with people when you literally hit it, not just out of the ballpark. You don't just hit a home run. You hit it like over the lights. I mean, when you crush it, like you always use this phrase, don't forget to touch home plate. Like, the run doesn't count unless you touch home plate. And so take the win. And so that is, aside from all of the spectacular pageantry that we're watching, and the media coverage and the buzz and who's going to win this thing, the lesson, if you could take away a lesson from this as an investor, listen, if you're up a squillion % on a position and you don't have like, a grasp of the, an expert level grasp of why it's there and what the additional upside could be. It's truly, you made a wager or you got lucky. and you crushed it, take the win. Like, don't play with that. Don't play with that. It's not house money. It's your money. Take it. Cash in your chips. Change your life. That is the big takeaway that I would give anyone that is dealing with this type of stuff.
Right. So in second to that, particularly with the stocks that have been targeted because they have a high short interest, these aren't, as you would say, flourishing businesses, right? These are, in general, declining revenues, declining earnings. These are businesses that have been caught in the crosshairs of an economic shift, mostly due to the COVID lockdown transition, right? GameStop is a retail video game seller. And look, I mean, how many people are visiting GameStops these days? Most of the new video games have downloadable games. So this is I would say a declining industry, right? And the reason this trade worked
was dead. Because the company's dead. Their business model's dead.
Right. And the reason this worked was because thousands and thousands and thousands of people are all marching in the same direction. This has nothing to do with the business or the fundamentals of this company. And the host of other high short interest companies that have been lifted through this type of mechanism there's a number of them, right? The GameStop's not the only one. This has been happening across other positions as well. But you got to.
Well, of course, because that's human nature, right? They're like, oh, we found a formula. We cracked the code. Now let's go hunting, and that's what's happening. And of course, but you know what? This is another thing that I think is going to bubble to the surface. If not, several things have come out of this. Number one, and I would say what to me, in my personal opinion, blew this thing wide open was the activity of these online trading apps like Robinhood and some of these other platforms where a lot of these day traders have been for a long time and using them for free trading and access to markets, which is good because these, Robinhood was saying, hey, we're democratizing finance. They're trying to get, people access to capital markets, and they shut them down. They stopped allowing people to trade in their accounts when all this stuff is going on. And that just blew up because then it was like, whoa, they're fixing the game. Like Wall Street's taking shells right now. And somebody called somebody and put the kibosh on this. And now these folks can't, trade their accounts, whereas the institutional money is getting to trade their money. And so that the fact that,
hold on,
we're looking at
this is the story. So the first part of the week, the story was, oh my gosh, look at these Redditors on this thread. They're all, piling together into a unified trade. Okay. That's how the story started, right? To me, the most important thing that happened in the last 48 hours was major brokerage firms like Robinhood stopped allowing people to buy these targeted shares. GameStop being one of them. Now you could sell your shares. The interview with the CEO from Robinhood that was done on CNBC, I would encourage anyone who's listening to this. It's a 5-minute clip. Andrew Ross Sorkin takes this guy down. It was an unbelievable interview.
Disaster.
And we're talking a major brokerage firm that is the preferred, probably I would say the preferred brokerage firm for younger traders.
Oh,
we've talked about Robinhood.
They're getting ready to have an IPO. They're trying to IPO right now because they're so big.
Right. So Andrew Ross Sorkin is questioning him. Why did you do this? Is there a liquidity problem? He says directly, there's no liquidity problem. So there are liquidity requirements that I am not familiar with that a broker has to maintain for regulatory compliance. I don't know what that is. He says, no. He says, there's thousands of other positions available that you can trade. Like, that's not the point. The point is not that there's other positions to trade. The point is that you've stopped the ability for people to buy this stock. Why? Well, we're taking a proactive measure. We're protecting our customers. Like, so now, thank goodness you're there, Vlad, to protect these, Wall Street bet Redditors.
Shenanigans.
Right. That was it was shocking. I'm not sure I recall a time when that's happened. I mean, I know, things get suspended and put on hold, right? Certain stock volatility, they sort of just take a breather, reset. That's not that uncommon. But just to say we're going to limit trading on this to only sell is mind-boggling. Now, remember this. How does Robinhood generate some of its revenue? Robinhood generates some
There
of
you
its
go.
revenue
Come on, Ross.
by selling order flow to hedge funds, high frequency traders, big, massive institutions like Citadel and other companies that have major influence in the stock market in general, but also short selling, right? This is not new to hedge funds. And so I don't know how much revenue is generated by Robinhood through the order flow. I've heard estimates that it may be as high as 40%. But basically what they're doing is they're selling your trade information to a competitor. Now think about it. Trading is a zero-sum game. There is a winner and there is a loser. And they are sharing your trading information with your competitor. So I was telling somebody about it and they were like, I don't understand. I was like, well, think about if you're playing poker, right? There's 5 of you around the table and you're playing poker and you're holding your cards, but you have to lay your cards down flat. Everybody can see what you're holding. And then we bet and we play the game. Everyone else knows what you have, but you don't know what they have. Well, you're going to win sometimes because sometimes you'll just have the best hand. But the people who know that, they also know how to bet. And so maybe they fold, right? It's hard for you to win in that scenario. So the fact that Robinhood,
such a good analogy. Such a good analogy.
So, like you mentioned, did the wrong people win? Is that the point? Is that, well, it was all fun and games, but now there's real losses here, real losses.
And because if you think about it, what we really saw, we didn't really see two institutional powers like duke it out. What we saw was these huge, like 1 to 2, like huge hedge funds that had this massive bet on GameStop, and they were doing their regular shtick, right? They're going on TV, talking down the stock, trying to make people who own it sell it so the shares would fall even further. And you had thousands upon thousands of retail like day traders like pile into this thing and said, no, we're not going to let you do it. And so it was truly like the people versus Wall Street in a sense, and the people were winning. And then that whole thing, everything with these platforms, what they did was, if we're going to say we got free markets and stuff, you gotta let the big whale take the L, and they protected them. There's no other way around it. They protected like the institutional money from getting smoked,
right?
Which they got smoked anyway. But from like the nail being driven into the casket.
Now I will say this: if there is market manipulation or fraud from the Reddit users, then fine, prosecute it. I'm not saying I don't want anyone to break the law in trading. And if there's something illegal about what they've done, then let's sort it out. Otherwise, you got to let them trade.
Yeah.
Because this is a free market and people make mistakes all the time. And you can't regulate someone's decision making. If they have the funds to buy a stock, then they can buy a stock. When have we ever worried about someone's having a loss in a stock portfolio? And I'm talking about a user-directed approach. Robinhood is not giving advice. You are going on there making decisions on your own, right? Whether right or wrong, correct. That's your choice. And sometimes you're going to lose. So are we only going to trade stocks that are priced appropriately? Is Tesla priced appropriately?
Oh yeah, I mean, where do we stop?
Right. I mean,
where do we stop? I mean, why do we let people buy Tesla with 1,000+ PE ratio? I mean, that sounds like insanity to me. No more Tesla for you people.
Right? Is it priced appropriately? How do I know? That's what the market's bearing. I have no idea if that's the correct price level. Is it going to go up? Who knows? Right? It could go down 50% this year. Would you be surprised? No. I mean, that's the point. We don't know what the future outcome is. Now, look, like I said, if they're doing something illegal, fine. Prosecute those that are doing something illegal. Let's get it out. But were we penalizing or punishing the hedge funds for selling short GameStop? Were we piling in there going, man, the stocks really collapsed in the last, few years. That's disappointing. Should we protect them?
It's like everybody says. I think Josh Brown put this up on his Instagram a bit. He was like, the people got mad because the wrong people were making money. It wasn't the hedge fund people that were making money. It was all these young kids, these day traders, the Reddit army, whatever they call themselves. And you know what? Through their collective discussions online, they found a glitch in the matrix and they cracked the code, and they should reap the spoils for that. And quite frankly, this is why a lot of people have such a severe distrust of our industry, the financial industry, Wall Street. It's because it's like this right here happened in broad daylight in front of everyone, and we saw what happened. It's like, these are the rules unless they're used against us. And in that case, we're gonna like you said, we're gonna change the rules of the game, and we're gonna make it so that you can't take down these big players who, quite frankly, they were playing with fire anyway. They're making their bet, and now someone said, "Hey, call." And they're like, no, we can't call, we can't lay these cards down. We need another dealer. And it's going to be nuts. But I think there should be significant investigation into what happened. I think personally, it will be surprising to see if Robinhood, that app, because it's the premier one. They weren't the only ones, but it will be surprising to see if they're able to recover from this from a PR standpoint.
I will add a little bit to this too, because one, I don't think what this group did was all that enlightening. This isn't like a highbrow, wow, this is a really fancy trade. It's pretty basic. You could screenshot, look for stocks with a elevated high interest, a high short interest, meaning there's a lot of people that have positioned themselves to believe the stock is going to go down. And then basically you just get enough people to pile into it and move the stock price up. It's a pretty lowbrow move. I'm not saying that this is like world-class intelligence
the magic of it.
This.
No, I'm not going to talk them down.
That
to me is the magic of it. The magic of it is they got enough people on the bus to do it. It's one thing if you're sitting around by yourself and you're like, why won't anybody just use this formula? This formula works. I'm telling you. But they got thousands of people to do this. And I'm just saying that to me is the magic, because it's like, who is leading the Lord of the Flies? Like, it's like, if you become like the Lord of the Flies, what we're seeing is like, there's a place at the table for people that can move this kind of money.
Right. Well,
listen, there's going to be this guy that started all this stuff. Don't be surprised to see him doing interviews and and everybody wanting to talk to him, because what we just witnessed was, a significant inflection point in how we're going to deal with all this stuff moving forward. And I think good for the little guys. If anything, they exposed something that everyone needs to see front and center, and that is how these folks deal with stuff.
I agree. I will second that. The reason why it worked so well, in my opinion, is because these people that were short were so exposed, and I can't reconcile how they could be caught with that much exposure to a single position. It's a little startling, right? That a group of people from Reddit can sink your battleship in a matter of days, and that might potentially sink a fund, sink a full hedge fund. I don't know. It's wild, but this is the perfect summation of having everyone locked down, stuck in their home, unable to, a lot of people probably unable to get outside, play sports, do things they're used to doing. They're bored. They just got stimulus checks, and then they put it to work. And frankly, it's kind of hilarious. At some level, it is kind of hilarious. Now, the truth is, as you know, it's very risky what they did. It is there will be losers, because eventually, if the stock reverses course and they're caught out there overexposed, this could end badly for some people. I'm not advocating that anyone listening to this go and do that, because it is somewhat nonsense, right? But it worked. It was a huge story. And if anything, it really exposed some of the big players, the idea that we are protecting our clients. That just drives me bananas. I don't know. It was so frustrating to see that, right? Where you're seeing the ability to buy a stock be removed. I don't know that I've ever seen that, where you could only sell a stock. I don't know that if it's happened. Maybe it's happened before and I just don't know it, but I was startled.
I had a few friends. I have a few friends that, I know I have more than a few. I have a lot of friends that I know use Robinhood and other apps, to dabble and to play. I mean,
Sure.
with their play investment account and stuff that, outside of their 401k with work, or what they're doing for their retirement stuff, which is totally fine in my opinion. I mean, that's how we learn. That's how we figure things out. And we kind of figure out who we are as an investor, and we experiment. But several of them messaged me because they were getting that notice, and they were like, is this normal? Is this legal? And I'm like, I don't think so. I mean, and I'm just saying it, imagine, I mean, I would understand. So like let's rewind back to 2020, right? When we're seeing those limit up days and limit down days. And it was just like, we are in the washing machine.
Yeah.
Like, I mean, the spin cycle is just crushing us right now. We just got to hang on, limit down, limit up. Which way is up? This is not that. This was specifically, we are stopping you from doing this. And the reason being given was for your own good, to protect our people. And the only response that I could give my friends was, well, their platform, their rules, because buried in those terms and conditions somewhere, there's the legal out that their attorneys are going to point to say, well, no, I mean, you agreed, you accepted our terms and conditions. But to me, that is a complete violation at minimum of your consumer's trust. It's going to be interesting to see. People way smarter than me are going to be looking at the legal ramifications of this. It's already got, the attention of AOC and Ted Cruz, who were, tweeting at each other saying, AOC, of course, is like, this is awful. And Ted Cruz is like, I agree. And I'm like, look out.
The real
look out if those two are in agreement.
What brings right and left together? Wall Street bets. The Redditors they cracked the code. They figured out how to get us all on the same page, unified against hedge fund dominance. All right, so great Warren Buffett quote. It takes 20 years to build a reputation and 5 minutes to ruin it. If you think about that, you'll do things differently. We'll find out if Robinhood destroyed their reputation in 5 minutes. I want to throw this out here too. There were some pretty hilarious social comments on this story. It's been all everyone's talking about.
Oh, it's been
there was a post. It said, if I was a hedge fund losing billions to Reddit shit posters, I would get a second job driving for Uber, cut out the Starbucks, and skip the avocado toast. So there's the advice to the hedge funds. Just drink less coffee. Remember, isn't that what the key to wealth that we always see on, like the recycled story that we see on CNBC every day? If you just cut out coffee and save that $5 a day, you'll have X amount of dollars when you retire. So there's the advice to Melvin Cap. Just stop drinking coffee and eating avocado toast. You'll be fine. I thought of one more thing. Do you remember a few years ago when the Obama administration set up the MIRA? Do you remember the idea of the MIRA, the My IRA, I guess?
Yeah, I remember.
So this was,
yes, I know where you're going with this.
So this was the government's answer to help lower income families start to save, right? With the idea being that a lot of lower income families, and I think the income threshold for married filing jointly was like under $139,000. So not really necessarily low income, but
it was about access. That was the whole thing. It
right.
was like, oh, these people that don't have access, the government's got to step in and give them, we got to spoon feed them because they don't have access,
Right.
which
So
completely ignored the fact that everyone that has earned income can open an IRA and a Roth IRA if you're legally
the MIRA was set
old
up
enough.
as a way to give access to people who did not have employee retirement plans through their workplace. But do you remember what the investment was? Treasuries.
It was government bonds.
So talk about a divergent
Here
strategy.
here you go. You can buy this one thing.
We'll take
government bond.
We'll take your treasuries and we'll raise you unlimited call options on a particular stock of choice. It's just the divergence in what young investors are doing versus what the government proposed is just that puts a smile on my face. No, we're okay. We don't want your government treasuries. We'll go ahead and just buy unlimited call, as many call options as we can stuff into our little Robinhood account. It just made me laugh.
Yeah, but to be like what you're seeing though is, it is in a way like the power of social media, because the thing that I saw and read the most common about like Robinhood specifically, but other these platforms, was that they were like gamifying trading. Like they were bringing this system and way of being integrated into markets to consumers in a way that it was like a language that they spoke. It was like something that they could get behind, and it was cool to them. And now they're interested and they're figuring some stuff out. And Wall Street's like, oh, wait, you guys can't really make money doing this. Now, that wasn't the point. The point was for you to supply us with capital. Right. It wasn't so that you could actually make money, silly kids. And,
right.
It just kind of, it just chafes me to watch that.
Yeah. Yeah, you're supposed to invest passively.
No, because to me, it's like
government bond.
If you bet big and it hits, you should reap the spoils. The same thing is like if you bet big and you get burnt, like you should take the burn. And isn't that what we tell everybody when we're coaching them about investing? It's like, look, man, we really want to understand your risk tolerance as an investor, because we don't want you to get out over your skis, because if the market gets too choppy, you're not going to be comfortable, and we don't want you to bail because that hurts you in the long run. But now we're saying, oh, well, we're going to let the hedge funds bail. We're going to let them bail. We're going to give them a get out of jail free card. That's nonsense.
Well, Ben Hunt has a great way to phrase it.
It's far from over.
So Ben Hunt has a great Ben Hunt has a great way to phrase that. He says that's privatized gains and socialized losses, and that's kind of what happened here. So, well, I'm glad we got
favorite that. Thing is burn it down. Well, this was fun. This was a fun episode. We wanted to hop on here and just kind of chop it up a little bit and talk about GameStop. Today, we're recording this on Friday the 29th, and so we timestamped that just because who knows what may still transpire before we even get to publish this episode and put it out there. It's been wild, and I suspect that this story. Can't say what's going to happen with the specific stock, but this story of what has happened, what's been exposed, who is pulling strings behind the curtains, all of that. I think we're going to watch this unfold over the next couple of weeks, and it will be stunning. And I'll say this, not because I want to open up another can, but just because it's in the back of my mind. We're going to see a lot of people wanting people to make rules and figure out like who should be in trouble. And dare I say, we're going to also learn how much money Wall Street has poured into getting our people elected. And so this could be one of those things where like, we're going to look to the representatives to say, wait a minute, this shouldn't be allowed to happen. But then we're going to find out who's been paying these people in Congress. It's going to be wild.
The story's not finished. We'll see who has the last laugh. I do not count out hedge fund managers and Wall Street from still figuring out how to make money on this circus. So don't think the story is over.
Not at
by
all.
a mile. But all right, buddy, that was a lot of fun.
This was fun. Thank you guys for listening. If you have a topic that you'd like for us to talk about on the show, you can always email us at themoneyhuddle@vcplanning.com. Thank you for tuning in, and we will talk to you next time.